I've combed the reports from economists to realtors to multifamily specialists to help you with your 2020 strategy to be a smart investor. I'm LeAnn Riley, national coach, trainer of the Proven Profit Formula, and real estate broker in Minneapolis, St. Paul, Minnesota. I'm leader of the Encore investment team in Realty Group. Here's my Market Trends 2020 report. From the National Association of Realtors, the national median sale price of housing is $270,400. That's up 4.3% from 2019. And southern cities in the U.S. should do better than most in other markets. The demand for low-end affordable housing is super high. It's a desirable category to be in if you can hold the line on construction costs, and a good category to buy for rental housing. Home sales will grow, though the lack of inventory will be a problem. It's going to be multiple offers. There already is. The spring market is early. It's cold. It's just February here and cold, and still we're seeing these multiple offers. Home values will continue to improve through 2020, and we expect like a 3.5% increase from last year. That's good. Mortgage rates are stable. They're under 4%. I love this chart. In 1970, they were 8.8. 1980, 12.7. 1990, 8.12. And 2000, 6.29. It's amazing, under 4%. Now, for those of you who are fix and flippers, the ROI, that'd be your return on investment, it's been falling for the last several years. What's the cause? It's the lower supply of homes. There's competition on the buy side and rising prices, or the cost of renovation is going up too. So be careful with your fix and flips. And the National Association of Realtors talks about 10 markets they expect to outpace other markets in 2020. Those markets are Ogden, Utah, Las Vegas, Nevada, Fort Collins, Colorado, Dallas, Fort Worth, Texas, Columbus, Ohio, Raleigh, Durham, and Chapel Hill in North Carolina, Charlotte, North Carolina, Charleston, South Carolina, love that place, and Tampa, St. Petersburg, Florida. Those are great markets to have investment property in. But what are the top 2020 markets? Well, it's kind of surprising. Boise, Idaho, McAllen, Texas, Tucson, Arizona, Chattanooga, Tennessee, Columbia, South Carolina, Rochester, New York, Colorado Springs, Colorado, Winston-Salem, North Carolina, Charleston, South Carolina, and Memphis, Tennessee. So there's a brief look at new markets. The wrap from Inman News says from 2012 to 2019, builders constructed 5.9 million homes, far fewer than what's needed for the 9.8 million households created in the same period. That's right. The United States is short 3.9 million homes needed to meet buyer demand. That's why we see this tight inventory. So the big question is recession possible? We're rethinking it, and it's not yet. There's a low chance of recession in 2020. And why? Because we're in a record age of expansion. The usual signs like inflationary overheating and financial imbalances, they don't look threatening right now. There's a strong job market, low mortgage rates. The problem is the inventory. It's this scarcity in the housing stock, especially at the lower price ranges. There's not enough homes being built, and homeowners are staying longer in their homes, creating a bottleneck. The market is going to move sideways rather than up and down in 2020. And from Housing Wire, is the U.S. in a housing bubble? Well, no. They say the purchase application data, existing home sales, new home sales, housing starts, and lack of cash out refinancing all point to slow and steady growth. Nothing about this cycle warrants the discussion of record-breaking demand or bubble talk. Now, looking at the rental multifamily side, Appfolio says multifamily is definitely more protected against economic downturns than any other type of property. A shift in the economy doesn't mean people will forego homes. They might forego retail, but people will always need homes. It's as simple as that. That's why I love real estate. People need housing, and as a number of potential home buyers continue to get outpriced out of the market, multifamily renting remains a top choice for many. So what's the bottom line? Growing demand, limited supply of inventory. Prices are continuing to appreciate while the threat of the recession is softening. It looks like 2020 will be a solid year for the real estate market. And from one of my favorite wealth masters who put out a real estate report, unemployment is at a 50-year low. More people have money to spend on housing. So Fannie Mae says for the 2020 multifamily market outlook that the nation's more than 80 million millennials have been the biggest driver of multifamily demand in recent years. Along with Gen X, it's expected to continue driving demand, particularly for rental housing. Rent growth is expected to be in the 2 to 2.5% range. New supply in some markets may contribute to a slightly higher vacancy rate. So why multifamily? Well, the trends to consider are favorable financing, we love that, and the lending factors. There's healthy lending caps, and they're expected to benefit multifamily in providing certainty that debt capital will be available within the pricing levels that we're accustomed to. The top 5 markets in 2019 of 50 plus units in multifamily, interesting. Number 5 is Dallas, then Seattle, Washington, D.C., Atlanta, and number 1 of the most affordable multifamily markets is Phoenix. These are from the sources of the National Association Realtor, Fannie Mae, Freddie Mac, Bankers Association, and some rental data. Wrap it up. That's my market trends report for 2020.